Okay, so my job is quite easy. I mean, we've already gone through Nandan's, how the future is going to be, and Pramod's talk us through the architecture. And I just wanted to talk about a couple of use cases, and then we'll actually go into much more detail on one of them. So somebody talked about the securities market. We've been working with SEBI, and the fact is that a very small number of people in India are on the stock market. They invest in mutual funds. And the reason is very simple. When you are a distributor of a mutual fund, you get 0.5% commission. You know your customer is going to churn. So you're only going to sell based on what it costs you to onboard the customer. If it costs you 1,000 to 1,500 rupees to onboard a customer, which is the number which many people tell me is the right number, then you will only sell to people who are going to invest 2 lakh rupees or more. And that is a very small fraction of our population. That's 3 million households. 3 million households who have income above 17 lakh rupees a year. And that's the only number of people who are in the mutual fund market today. On the other hand, if you're able to go paperless, cashless, then the cost comes down to under 100 rupees. We think it can come down to under 10 rupees. That will expand the market for the next 400 million, right there. You go from 3 million households to 31 million households right away. People who have over 3 lakh rupees of income, they can invest in the market. So that's one way by which you can actually go out. And SEBI actually passed enabling regulation on that. And then, of course, something with paper popped up. And we're working, we'll make it happen again. And that's, there's a game, you keep the hammer, keep banging away, right? So it feels like that, but we'll get there. And of course, if your cost of payments go down, today people tell me that when you have a SIP instruction to a mutual fund, they still pay about 25 rupees for that instruction to be executed, right? And if that's the number, then you're not going to take a 500 rupee or so as even a monthly flow. On the other hand, if it's down to 2 rupees, you'll take it. And that's exactly what we want to happen. We want to make sure that the price of the transaction is much less than even 2 rupees. We think it should be less than that. And then we should be able to see, again, these small sachet-size transactions going through. So this is really what you're seeing. If you're going to be able to go paperless, presenceless, cashless, it'll reduce your onboarding costs, have instant gratification. The drop-off between people signing up and the guy showing up at your door for a thing and then coming 3 times again with all the missed calls in between will all go away. And that is exactly why you want to use the IndiaStack to do this. And this is what we believe, that financial inclusion is to be got by reducing costs and not by subsidies. So basically, if your cost can go down dramatically, your market size goes up. And that's how we want to do it. Now, credit. Nandan spoke about Rajni who can't get a loan. And everybody tells us there's 3 reasons. The cost of sales of a loan is high, servicing cost is low, and there's no credible data. This is particularly true for customers at the bottom of the pyramid. If you look at our formal system, the highest interest cost is in the microfinance segment, which is over 24%. And this goes to people who are at the lowest end of the pyramid. They're the lowest default rates. I mean, we all talk about risk-reward ratios, it's completely inverted, okay? And people with the highest, with the repayment history have the worst interest rates. But we want to change that. So we sort of had this session where we tried to figure out how we could change that. We said, if she can get a loan, she agrees to share her data, she sees loan offers from multiple people, she accepts the best offer, receives the loan, she does the business she's doing, and at the end of the day, she repays loans. If she can do all of this without going anywhere on her smartphone, then we are done. So we said we need things around it. We need a credit marketplace app. We need consent architecture. We need the ability to do paperless contracts. We need to be able to do payments. We've got all of that except the domain-specific thing, which is the credit marketplace. I mean, Aadhaar eKYC, DigiLocker, consent, e-sign, UPI, all provide this. So we got to this point where we said we can do this, and we said, how are we going to prove that it works? And this is our vision, where you have millions of borrowers who use their digital footprints, go to credit marketplace, and there are thousands of lenders giving them possibility of loans. If you're able to do this, data-driven, algorithmic, electronic contracts, no paper moving, then we are home, right? So we said digitization of the process will lead to, each of these words is extremely well chosen, and this is, we are not giving, we are fully compliant with regulation, and we can still do this. That's what we need to do. So we set up a pilot, and as a part of the pilot, we had many people come in different places, lenders, marketplaces, data providers, and Khosla Labs agreed to be the KUA and AUA for us, and eMudra helped us with eSign. And with this infrastructure, from the day we started talking, within 2 months, actually, the credit marketplace was live, and we had disbursed the first loan. And I'm now going to invite Gaurav to talk about that.
Thanks, Sanjay. Good afternoon, everyone. My name is Gaurav. I'm one of the co-founders of Capital Float. As Sanjay said, they've built a lot. What we are trying to build is the credit marketplace, a hybrid model that serves SMEs today. And also, we as an NBFC act as one of the lenders on the marketplace, but also get banks, NBFCs, and other lenders who sort of co-lend along with us. Quickly on the team, Shashank and I are the co-founders, and over the last 2.5 years have built a team of technologists as well as folks from traditional financial service institutions to make sure as we get innovative and creative in lending, we don't lose our shirt in the process as well. We are a highly regulated industry, so an importance towards the board that we have, as well as in terms of corporate governance and advisory board that makes sure that we do everything as per the book. Quick sort of roundup on the products that we offer. To Nandan's point, I think one disruption is actually offering innovative products. So one that we offer is called Pay Later, which is like a virtual credit card to SMEs to make payments. Online seller finance, we're amongst the first to start financing e-commerce merchants. Unsecured business loans for the most traditional SMEs. Merchant cash advances, where you get a loan against your POS machine if you're a retail outlet. And invoice finance. And taxi finance to drivers on Uber and Ola. So coming to the reason why we're here today. With IndiaStack, I think a couple of months ago, as Sanjay said, we were very, very successful in actually disbursing a loan in India for the first time in under 10 minutes, around 8 minutes to actually be precise. And a lot of work went into this, obviously from IndiaStack as well as from Capital Float. And what I'll do is take you through one particular case study of how this happened. This is the customer segment that we went after. This is a Kirana store. Very, very underserved segment, as you would all know, by the formal institutions. Guys are starting to get a digital footprint through some of the Paytms, free charges, through the Echoes and Oxygens of the world, but really nobody providing credit to them. And these are actually borrowers who we dispersed money to. Loan amounts are small, which is typically in the range of what they need, 30 to 50,000 rupees. And typically these borrowers do transactions of, money transfer, DTH recharges, mobile recharges, etc. How the process works, you download the Capital Float app from the Play Store. Right now it's only on iOS. I think, it's only on Android, and soon hopefully will be on iOS as well. You register an account by getting your OTP. Very quickly log in, verify the OTP, and there you get started with the application. What you do is then you select on a slider what size of loan you're looking for. Today we're restricting up to 1 lakh rupees. Going forward, we'll probably increase that as well. Then what you do, you give consent to get your data, and this data is, some of it comes from the ecosystem partner, let's say like an Echo, Oxygen, Paytm, etc., where they have transaction data which helps in underwriting. You get bank statement recreation through SMS data. You're allowed to pull CIBIL. Most of them actually do have some CIBIL track record. And then obviously eKYC through Aadhaar. Once you're done, you enter your OTP and your Aadhaar number to get your eKYC verified. Enter your name along that as well. The Aadhaar sends the OTP to the registered mobile phone. We automatically read the SMS as it comes in, or you can also, if you have another phone which is registered with Aadhaar, you can use that and then manually enter your OTP into the app. Immediately there's a credit model that's run on the back end that's obviously has approved or rejected the loan. If it's approved, what you'll see is as we're building a marketplace, we are one of the lenders there as well. So we'll tell you, hey, this is your loan amount, this is the interest rate, this is the tenure, this is the EMI, what you can get. And these are all actual sort of loans that were disbursed. You choose the offer that makes the most sense for you, whether it's based on tenure, whether it's based on pricing. Post that, what you do is once the offer is selected, you sign the loan agreement, which again is completely digital through the e-sign. These are the details of the loan so that you make sure it's completely transparent and given to the borrower. He knows exactly what he's getting into. And the terms of the loan agreement. Now, this is obviously mandated to make sure that the borrower reads this. Some of them do, some of them don't. But from our end, we need to make sure that the loan agreement details are completely put in there to make sure he has complete access to it at any point in time. The e-sign agreement, again, through your Aadhaar number, you get an OTP. Now, you can either you do through the OTP. The issue sometimes what happens, and I'll come to some of the challenges, is sometimes the mobile number that you've used on Aadhaar is different from the mobile number that you're using on your application form. That's something that we will work towards getting over, but for right now, that is sometimes a bit of an issue. E-sign is then verified with a body, as Sanjay said, using e-mudra, you have CDAC, you have a few others in there as well. You get the OTP, you enter the OTP, and your loan is actually disbursed. In the first model, we've used the disbursal through NEFT, RTGS, but soon when UPI is live, the idea is you'll actually complete this transaction using UPI. This actually worked, and more importantly, it worked in under around, like I said, about 8 minutes, right from application to disbursement of the loan, which I don't think has happened ever in India before. And I'll just come to the reaction of the borrower, but it was a fantastic experience, both for us as Capital Float, obviously working with IndiaStack, but for the ecosystem partners who we were working with, like Paytm and Echo as well, because now you're actually starting to open out credit for the masses. Some of the challenges, obviously, there are a few. One is the cost and the process of applying for approvals to different institutions, government bodies like eMudra, etc. It does take a little bit of time, and obviously the cost is not the cheapest to start with. Regulatory, people brought up a lot of regulatory hurdles, obviously with the RBI, with SEBI, etc. We work with the RBI, so whether you use biometric for eKYC, whether you use OTP, these are some things that are still being obviously worked upon. Like I said, one issue is that the person who has his Aadhaar number and his mobile phone are probably different mobile phones, right? So if his mobile phone registered on the Aadhaar is one number, but what he's applying with is another number, it can cause some dropouts and issues. People generally tend to have the other mobile phone next to them, so it becomes easy, then they can manually enter the OTP. But if it's a number that they're not using anymore, it becomes a bit of a challenge. On the benefits, I think everyone has really spoken about this, but this is what we've actually seen live, and this actually worked for us, right? If you take a traditional lender, there are issues around, you have to send somebody to do OSV of the KYC, there's a loan agreement that needs to be printed, then you'll send your feet on street salesperson to go get that loan agreement printed. It takes him 3 hours. If the borrower is not anywhere close to the office that you have, it takes almost a day to go get a 50,000 rupee loan agreement signed, which makes it completely unviable. Then you got to store those physical documents. You'll take a NACH from him, you'll take a PDC. The physical loan agreement document, as mandated by the RBI, needs to be stored for 10 years. And then there's the transaction cost of the NEFT, RTGS, or the NACH, right? All of this has been sort of eliminated, or rather drastically reduced through working with the IndiaStack, where eKYC really replaces your OSV of KYC. E-sign replaces the entire headache of actually having to print a loan agreement, get it signed, sending someone to get it signed, and then the storage of documents. And finally, the transaction costs on UPI, which are going to be significantly lower when compared to what we have today in terms of NEFT, RTGS. Finally, the most important benefit before I wrap up, and I'll come to that, but some of the big issues that they solve for us in terms of a lending process is obviously the eKYC, e-sign, and then the payment through the UPI. I think what's great is it's scalable because it's an application that's built over one particular unique identifier. And then the defined architecture, it's built fairly easily. I think somebody was asking this question. That's all through APIs. And our tech team, over a matter of a few weeks, actually worked with the IndiaStack team, built a lot of these APIs, and we were ready to go live. I think the great thing is the mobile-first approach, given that you're going to really ride on the smartphone penetration. You don't really even have to have a laptop, PC, etc. All the loans that we dispersed, and about 100 of them so far, have all been through the mobile phone itself. And finally, it gives us actually in some ways a level playing ground to go against the large banks and NBFCs, because they may take some time to catch up with this, but we are already live and we can actually start penetrating this segment. And there are millions of these retailers. We're not talking in thousands. There are millions of them. But the biggest benefit, I think at the end of the day, is the retailer. So I was personally present at the first couple of ones that we did just to see what the process felt like. And the response of the borrower is actually something that's far outweighs any of the cost benefits. Forgive me, but this is the biggest sort of achievement, more than the cost, etc. He said, wow, I could actually get a loan. He saw it in his bank statement in about 10 minutes. And the joy that he sort of expressed was phenomenal, and I think that's something that keeps us motivated, and thank you guys for allowing us to be part of this pilot. Thank you.